So, thank you very much, Alex, for joining today. So, we are very lucky to have Alex Whipham from Landbay joining us. Landbay is a big intermediary mortgage lender, and we're very grateful for your time, Alex. I know you're very busy. Just before we get started, just obviously want to be clear today is a general kind of purpose chat and for information purposes. So, none of the information that we discussed today should be relied upon from advice. And of course, Landbay and Alex, who could self as well, are not providing any advice in this session. We're just talking around some of the things to be considered around buy-to-lets. And thanks for joining us today.
Yeah, thanks for having me.
So, Alex, I guess with all those things considered, when we're considering all the different regulations, licenses, all these other things we need to consider, why become a landlord? With all that considered, is because we probably listed lots of reasons today where you maybe would think, oh God, do I want to become a landlord? But why would you become a landlord?
Surely for the fun of it, I think sometimes.
It's a lot of fun.
um, I think the desire to become a landlord is often to complement or to replace somebody's pension plan. Typically, if you are looking at a property, it's a long-term thing. It's unlikely, unless you get very lucky, that there isn't an easy way to get rich quick in property. Especially if you're starting off with a modest capital, and you're not already cash rich and you can, buy things without financing and flip them and convert them and things like that.
Mm.
In the long term plan, much like a pension. But the difference is, usually when you have pensions, you have to wait until a certain age before you can start cashing in your chips on your pension.
Yeah.
Whereas in property, you can effectively grow a small residual monthly income as well as having the capital appreciation on your initial investment. And in addition to that, you can leverage your properties. It's difficult to leverage, if not impossible, pensions and savings. So,
Yeah.
you yes, you can receive 3, 4, 5% on your capital on a bond or a savings account at the moment, but usually it's fixed in for 12 months, 3 years, 5 years, or what have you. And yes, you may have, a steady increase of 4 or 5% a year. You've got no hassle factor of managing tenants and having all this regulatory red tape and mortgage products and navigating all of that. But, typically, if you look at house prices in the last 20 years or so, they have doubled in value. Usually, with the exception of the odd 1 or 2 year, they grow in value every year on a fairly predictable level. It's tangible. You can see it, you can feel it, you can visit it, you can touch
Yeah.
it. Personally, I like tangible assets. Having money in a computer to me worries me a little bit. I like to have investments that I can see, I can maintain, and I can go and touch and physically look at it. So there is always that to consider. And like I said, you can leverage your properties in your portfolio. You can effectively borrow most of the money from a bank or a mortgage lender, put in a small amount of deposit yourself, comparatively small, and multiply your assets by leveraging debt from banks and lenders. So if you look at the last 20 years, properties have almost doubled. I think around 2005, average house price was around 150,000. Average UK house price is about 285 now. So if you bought a house 20 years ago, it's doubled in value now. You've also received rents for 20 years.
Mm.
Rents, yes, mortgage costs are going up. We need to consider that rents are also rising very, very rapidly. So yes, your costs are rising, but if you are keeping up to pace with rental inflation, your rental income is going up 8 to 10% per annum at the moment as well. And also you're contributing to the housing needs of the UK. There's a massive supply issue and a huge amount of demand. So, yes, you are tangibly having an asset that you invest in, but you're also helping to support housing in your chosen area as well.
Yeah, I think that's a really good point, isn't it? Because sometimes there's a too easy knee-jerk reaction to landlords to say, oh, they're buying everything and that's why no one else can buy anything and blah blah blah. And that's not really the case. They're actually providing a very good service because the state isn't providing it, that's for sure. So and hasn't been for years and probably never will do for years. So if you want to contribute in that sense, if you're going to be a good landlord, If you're going to be a bad landlord, you're not going to contribute. But if you're going to be a good landlord, and you have a lovely property, well maintained, and you've got a great tenant in there, the tenant has got a home, they're starting out, you've got a property, you've got an investment, you're doing well. Everyone should be a winner in that scenario. And it's a really good point you mentioned there around the leveraging, which is something you just got to get your head around, because often when you're talking about buy to lets, often I hear clients say, "Oh, I want to buy to, but I want to pay the mortgage off as quickly as possible." And okay, you can do that. That's fine. But if you've got a 200 grand property, and let's just get the math simple. Let's say you use a £50,000 deposit to buy that £200,000 property. You're then exposed then to the £200,000 property going up in value, the £200,000 property renting for 1,500 a month, whatever it is. Whereas if you had that 50,000 in the bank, that 50,000 is just going up by 50,000, whatever it's invested in. So, your 50,000 suddenly becomes a £200,000 investment, and plus then the rent on top. And even if the profit isn't huge at the beginning, again, the rent is the figure that's compounding, not the profit figure. Like the numbers you just mentioned earlier, and obviously prices can go down as well as up, and all the caveats you'd think of normally there. But long term, which is how you should view these things, long term done right, yes, it should do well for you, and should do well for the tenant as well. I guess just while we're talking about tenants, is there a just starting out, if you're a first time landlord as an example, or you maybe even experienced, is there a type of tenant people should be aiming for, or is it that there's just so many different types of tenants, whether you're a professional, whether you're a student, whether you're housing association, whether it's a corporate let, Airbnb, all these different variables. Is there an ideal tenant, or do you think it's just depending on what you're looking for, maybe?
Yeah, it's completely depending on what you're looking for. I mean, if you are a full-time employee, you're working 50 hours a week, and you want to manage a property yourself, and you've decided to go and buy two holiday lets 250 miles away from where you live, you've got to be prepared for the aggravation that's going to cause you in your very, very busy 10-hour day PAYE role, plus also managing cleaners, turnover issues, management, etc. So it really depends on your status, your risk, and your outlook. You could look at a student HMO if you want to buy near where you live and you happen to live very close to a university, so you know the local area, so that's in your favor. But there really is no right or wrong answer. If you look at statistics, yes, HMOs, MUFBs typically will return a greater gross and net yield than a standard buy-to-let. The trade-off is going to be the hassle factor is higher. Typically, the management and maintenance is going to be higher. Mortgage costs typically, not always, but typically higher. If therefore you want an easier to manage property, a standard, one bedroom flat is going to be easier typically to manage than a 6 bedroom student HMO. So it very much depends on individual borrower profile, the area in which you're choosing to invest, and making sure you understand that different types of properties are going to attract different types of people. A 6 bedroom HMO with 6 en-suites and a garden is going to attract a different type of person than a 6 bedroom HMO with no communal area, one shared toilet, and no garden. So it's about doing the maths, running the numbers, thinking about how much time you have to invest in your hustle, in your side hustle, or your full-time portfolio, and making a personal individual choice based on that.
Yeah, I think that's very good points, Alex, and it leads to the thing I always say around the when you're taking on a tenant as well, and when you're starting off being a landlord. So many first-time landlords I speak to are wanting to go literally diving in at the deep end on the multi-freehold blocks or the HMOs and everything else. And often I point out to them, well, firstly, when you look at the wider market, there's only so many lenders who lend to a first-time landlord to begin with, for the same reason that there is a lot of complexity to it, and they want to make sure that you've got some experience with it. On average, most lenders will count you as a experienced landlord when you have 12 months history of renting a property out. And actually, I often say to clients, look, before sometimes you dive into a very complex transaction with so many different moving parts, just getting the basics right to begin with, getting used to being a landlord, because you can rent out a one-bedroom flat, and then all the things you need to consider with a landlord are all going to apply to that, the same as with a HMO. It's the HMO and the other ones are even more, niched in terms of the licenses and regulation. So actually, sometimes just yes, get into property if you want to, but there's nothing wrong with just starting off with a fairly simple property, something straightforward, gain your experience, which typically unlocks more mortgage options, but also you get familiar with what the process is, and also the things that maybe will go right or wrong. And then when you're applying that on a much larger scale with larger properties, bigger numbers, you've prepared yourself. And one thing I also say is around the tenant that you take on. We've talked about how a property can be an investment. Again, prices can go down as well as up. But if it's your investment, you should want to treat it like your investment. And I think that comes back to the tenant that you take on. And it doesn't matter which tenant, all the different variables of tenants we talked about, but always do your due diligence on the tenant. The letting agent you're going to use, yes, they'll find you someone, and I'm sure they'll do their due diligence, but they won't do it as well as you will do, because it ain't their investment, it's yours. So doing upfront due diligence on the tenant, I always think is key in terms of whether you ask for, a few extra months worth of bank statements, whether you ask for a copy of a credit report, and whether that's you are going to review that, or you're going to ask the letting agent to review it. But nothing wrong with asking a few extra steps just to really make sure you're comfortable with the person who's coming on, because once they're with you, you're stuck with them to a certain degree, and it's very expensive to unpick that and very uncomfortable for both parties to unpick that. So it's always very important, I think, to do your due diligence up front on a tenant before you take them on.
Yeah, agreed. Yeah, absolutely. I think whether you choose to manage it yourself or whether you choose to use an agent to act as an extension of you, it's always from my own point of view, I would always do my own due diligence and carry out pay slips, bank statement checks to make sure that, I know who is going to be paying the bills, who is going to be paying the rent. If you don't have an oversight or understanding of who's going to be occupying your property, then that, of course, is an investment risk, isn't it really? So whether you choose to use a letting agent, if you do, make sure you do thorough due diligence on the letting agent and make sure that they are carrying out the checks in accordance with what you've asked. Or if you choose to do them yourself, make sure you follow the relevant compliance rules and regulations. And if you don't know and you want to protect yourself, you can always join in one of the landlord associations that are out there that charge 70, 80 quid a year to give you access to membership, which will give you access to their legal support helpline and various documents and things like that to manage yourself. So yeah, it's just always about making sure that you know everything and you're educated before you make the decision.
Yeah, absolutely. And you're right, there's a lot of insurances that you can take out. And of course, they're there to deal with when things have gone wrong. But you can do a lot of things up front to help you avoid having to call that helpline because you've done that due diligence. And I guess just on a last point on that subject, sometimes it's just overlooked. It's just remember it is a business and you've got to run it like a business and all the reasons we just talked through, but there is still a human at the other end of it. And just having that personal touch sometimes with your tenant in terms of whether it be, could be even simple things. It's their birthday, you send them a message to say happy birthday. It could be Christmas, you send them a little hamper or a bottle of wine or something. You should want a good relationship with your tenant. And by and large, from my experience, if a landlord is wanting a good relationship with their tenant, the tenant wants to reciprocate and wants a good relationship with the landlord because they're always conscious the rent could be put up or they could be asked to move on or something. So I think if you go into it wanting to have a good relationship, having done all your due diligence on the client, on the tenant, then, if you start off as you mean to go on, then that normally is reciprocated and you have a nice, pleasant relationship with your tenant, because anything other than that is only going to cause you aggro and time at some stage.
Yeah, absolutely. Couldn't agree more.
Thanks for watching. And if you have any questions, please ask below and hit subscribe below so you don't miss out on our next episode.